Hello guys, hi, thank you very much for your positive feedback. I really appreciate it. As discussed in our previous video, today we are going to discuss VAT. This discussion will be very high level discussion of VAT. What is VAT? What are the two major strings of VAT? How VAT works? In our next video, we will have full and comprehensive overview of UAE VAT law. Thank you very much for joining us. Yes, viewers, we are discussing three important things today, and it will be quite helpful for us to know the mechanism of VAT. Right now, VAT is being implemented in more than 160 countries, and all the countries are almost following the same mechanism. So what is VAT? There are some features of VAT. First of all, this is indirect tax, means tax will be applicable on different person. Ultimately, burden will be borne by the different person. Or tax will be applicable on the goods and services that are taxable income and taxable profits of the persons. So this is a consumption tax. Consumption tax means whoever will consume the goods and services, the relevant person will be liable to pay the tax. Third, this is a multi-stage tax. Every player in the supply chain would be liable to charge tax to the customer. Value added tax. Yes, this tax would be applicable on the value additions by the respective supplier, and the only tax on the value addition will be paid to the tax authority. Captures sales and purchases of a supply chain player. This is the beauty of this model. All the players in the supply chain, manufacturer, distributor, retailer, this model will capture the sales and purchases of each supplier. We will prove all these things by the end of the lecture. We'll discuss one example. So strings of VAT. Every business has two status. Business is buyer as well as business is a seller also. Whenever the business is buying anything, business is purchasing anything, business is paying input tax. And this input tax business is taking back from the tax authority. Because the input tax is the asset of the business, and businesses are taking it back from the tax authority. Seller, whenever the seller, business as a seller is selling anything to the customer, business is charging output tax, and this output tax business is paying to tax authority. So that's why, since this business as a seller are collecting output tax from the customer, I am always asking, these are the presumed collector of the government. So we can summarize our discussion like this. VAT has two strings. One is input tax and second is output tax. Input tax is applicable on purchases. Output tax is applicable on sales. Input tax receivable from tax authority. Output tax payable to tax authority. Input tax is the current assets. Output tax is the current liability. Net receivable. If current assets are greater than current liability, then net amount is receivable from tax authority. And if current liability is greater than current asset, then net amount is payable to tax authority. How we will pay this amount, how we will receive this amount, we will learn this later on. How VAT works. This is a slide which is very close to my heart, and this is a very comprehensive slide to know how VAT works. And we will be able to apply whatever we have discussed in the definition of VAT. We will be able to apply all those concepts. So let's just take an example. There is a one seller. Seller is selling goods and manufacturer is buying goods from seller. The value of the goods is 100. Seller sales is 100. Manufacturer purchases are 100. On the sale, if I'm taking 5%, 5 is the output tax. Output tax, as we discussed earlier, applicable on the sale, and this is the liability of the seller. Input tax, this 100 is the purchase. 100 are the purchases of the manufacturer. Since manufacturer is purchasing goods from supplier, so the purchases of manufacturers are 100, and manufacturer will pay 5% tax on this purchases. It will be considered input tax, which will be the asset of the manufacturer. So at the end, 5 is the asset of the manufacturer, 5 is the liability of the suppliers. So this is output tax, this is input tax. One party, as a supplier will pay output tax. As a manufacturer will claim input tax. So assuming now manufacturer sold the goods of 150 to the wholesaler or distributor. So the purchases of manufacturer were 100, sales is 150. So 5% will be applicable on the sales 150 into 5, 7.5. This 7.5 is the output tax, which is the liability of the manufacturer. So at the same time, 150, which is sales of the manufacturer, this is the purchase of wholesaler or distributor. So on the purchases, distributor or wholesaler, they will, whatever they will pay input tax to the manufacturer, they will take it back. So this will be 5% of 150, it will become input tax, it will be asset of the wholesaler or distributor. So this 7.5 is the output tax of manufacturer, 7.5 is the input tax of wholesaler. Next, assuming wholesaler or distributor. Now wholesaler sold the goods of 200 to the retailer. So 200, 5% of 200, output tax 10. Output tax 10 and liability. 5% of 200, 5% input tax asset, because these are the purchases of the retailer. So at the end we can say this 10 is the output tax of wholesaler. At the same time, this is the input tax of the retailer. End user. Now retailer is selling the goods of 250 to end user. Whenever the retailer is selling the goods of 250 to the end user, 5% of the 250 is 12.5. This 12.5 is the output tax liability of the retailer. But end user 250, this is the purchases. 5% end user will pay to the retailer. 5% of 250 is 12.5. It will become input tax, but this input tax is not the asset. This is expense. So this is expense. Now let me apply the definition, whatever we have learned. The 5 things were there. First of all, indirect tax. Yes, we can see I have applied the taxes at different stages, supplier, manufacturer, wholesaler, retailer level, but ultimately burden has been borne by the end user. Second, consumption tax. Yes, this is the consumption tax. This is the person. These are the people who have consumed the goods and services. Ultimately, they pay the burden 12.5. 250 into 5%, 12.5. Burden will be borne by these people. Third, multi-stage tax. Yes, tax has been applied at different stages. Tax has been applied here, 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 here. At 4 stages this tax has been applied. That's why I was calling it multi-stage tax. Value-added tax. Yes, this is a value-added tax. Can you see this? Manufacturer, just take this example. Manufacturers purchases are 100, sales is 150. How much they are paying? 2.5 to tax authority. 2.5 is 50 in value addition. 150 less 100, 50. 50 into 5, 2.5. This 2.5 they are ultimately paying to tax authority. That's why I was calling it, this is a value added tax. And the last one is it captures sales and purchases for all supply chain players. You can see this. We know the supplier, how much is the sale. We know the manufacturer, how much are the purchases, how much is the sale. Wholesaler, how much is the purchases, sale. Ultimately, 12.5, the tax burden has been borne by the end user, but the government has not collected this 12.5 from end user directly. Government has collected 5 from supplier, 2.5 from manufacturer, 2.5 from wholesaler, 2.5 from retailer, and the total is 12.5. And 250 into 5%, 12.5. So at the end, how much is the tax receivable and tax payable by the Federal Tax Authority? So total receivable, Federal Tax Authority or Tax Authority, I can say, Tax Authority has a right to receive 35 from all the players in the supply chain. 5 from this party, 7.5 from this party, 10 by this party, 12.5 by this party. So government has a right to receive 35. Government has an obligation to pay 22.5. What is this 22.5? 5, 7.5, 10. So how much is the net receivable? 12.5. This is how VAT mechanism works. Thank you very much for watching this video. I'll wait for your feedback. Stay safe, stay blessed.